If you own a home in Canada with a legal basement suite, I beg of you to watch this video in its entirety. The reason being are the results that the strategy I'm going to show you can result are absolutely financially life changing, not only for you, but potentially for your family as well, because the results that we can get from a strategy like rental cash damming are not in the thousands or the tens of thousands. Oftentimes, they're in the hundreds of thousands of dollars that you are able to either retire early or pass on to the next generation. And the best part about rental cash damming, it doesn't take any additional cash flow from you yourself. So today's video is not going to be a full breakdown walkthrough of what rental cash damming is. I've included my original video that I did on this strategy below. It gives you a much more in-depth look at how rental cash damming works. Today's walkthrough is going to take you through a scenario, and I hope as you're watching it, you can look at your own scenario and find opportunities where you might fit into this exact place and be able to change you and your family's lives. Today's video is for educational purposes only. If you are wanting to run a rental cash damming scenario, I implore you to reach out to the proper professionals to make sure it is done correctly. I hope you enjoy the video. So to start our rental cash damming scenario with Legal Suite, let's give some parameters to the scenario that we are running today. Let's say the total square footage of the home is 4,000 square feet. The primary residence being utilized by the owner is 3,000. The rental portion is 1,000. This breaks down to a percentage of 75% being used for personal use, 25% for the rental component. If we break down the value of the property, it's $1.5 million. This gives us a total mortgage required of $1.2 million. Now, I said I wouldn't go too far into the weeds on the explanation. It is fully explained in the other rental cash damming video I did, but a quick one is that you do need to have at least 20% equity in the property in order to get the correct mortgage structure to rental cash down. So in this case, our minimum mortgage required is $1.2 million. So mortgage segment number one is $900,000. This is non-deductible primary residence debt. $300,000 of this mortgage is tax deductible because it's attached to revenue generating purposes of the basement suite. Now let's go over to our rental cash damming calculator and see how these figures play out to give you, the client, potentially massive benefit. So starting us off, we have that primary residence value of the home, or at least the portion for the basement suite, at $1.25 million. The mortgage balance on that section is worth $900,000. This is at an interest rate of 4.45%. Our amortization is set at 30 years, and the monthly payment on this is $4,511. To start with, our home equity line of credit has a $0 balance, and the investment or the home equity line of credit interest rate is 5.45%. Now touching on the rental component, we have the value sitting at $375,000 and then the mortgage balance sitting at $300,000. Typically, when running a scenario, the interest rate we'd use for the rental component would be a little bit higher, but in this case, because it's attached to the primary, we are going to get the best rates, and so we're sitting at 4.45% as well, also at that 30-year amortization. I'll quickly point out here that if we add the mortgage payment on the rental component and the primary residence mortgage, it's going to equate to that $6,015. Now, this is the exact same payment that you would be making regardless of whether you were rental cash damming or not. This is the amount that is due to the lender. All we've done here is break down the components into a tax deductible component and a non-tax deductible component. Next, we have to figure out the expenses related to this rental property. So for maintenance and insurance, we're saying $152 per month. No condo fees or management for this property because it is our primary residence. Property taxes at $150 per month. Now that gives us a total monthly expense of $1,806. So in our first scenario, what I'm going to run is just doing our basic expenses. No, not adding up all of the rental income we're receiving. We're projecting that this basement suite could rent for $25 We're projecting that this basement suite could rent for $2,500, and we only need $1,806 of that to service our most basic expenses from the property. So that gives us a delta for personal use of just under $700. This is money that we can use. It's your money. You can do whatever you want with it, whether it's invest or spend. But let's say these clients need these funds to help supplement lifestyle. The assumptions that we're going to make on the rental calculator are a rental value appreciation rate of 2% per year, cash flow of 2% per year, and an investment growth rate of 8%. So this means once the mortgage is completely paid off, we're going to assume that you're going to invest this money back into the market, and we're just using 8% as our investment figure there. If you think this is too high or you have a personal scenario, happy to use the numbers that you would like to run to make sure that you're getting the scenario estimation that you believe. The marginal tax rate that we're using for this client is 40%. Before we get to the benefits, I want to walk you through how the cash flow cycle looks for this specific scenario. So here is our diagram. The rental income comes in every single month, and we also have our regular mortgage payment. A portion of the regular mortgage payment goes towards paying down the principal as well as our total prepayment. And this opens up room on our home equity line of credit. And we then reborrow the expenses that we need to service our rental property of $1,806. Now, just by utilizing the basic expenses, what are the financial benefits to this specific client? So here are the financial benefits. We can convert their $900,000 non-deductible mortgage into a tax-deductible loan in 15.75 years. We are able to realize tax refunds of $129,000. Using these tax refunds and the structure of rental cash damming, we reduce our monthly payments by 61. This represents future savings of not having to pay into this mortgage of $275,000. You would have to earn $458,000 in order to make those payments. So if you made $100,000 a year, it's essentially like knocking off 4.5 years of your working life. Now focusing on the amount of time that we can shave off the amortization, we now go from 30 years to a 25-year amortization. So 5 years of paying your mortgage is just gone. Don't have to worry about it. And over that time frame, if we were to invest those monthly payments, what would our total net wealth be? So this is that 8% figure. We would have a net wealth improvement of $338,000. Isn't that incredible? Simply by redirecting our rental expenses, we are able to generate an extra $338,000 for these clients. Now I'm going to make this even more exciting for you and show you what happens if we utilize the full $2,500 for these clients if they were to, take that cash flow and then also pay down the mortgage. All right, so exact same spreadsheet. The only change I've made is the client is no longer utilizing that $700 for personal use. We're able to use that full $2,500 to run the rental cash damming cycle. So quickly taking you through the cash flow cycle here so you can see it. Our regular mortgage payment goes in plus our prepayment, but we're still only borrowing that $1,806, and this goes towards servicing our rental expenses. So what are the financial benefits by utilizing that extra $700? Debt conversion takes place earlier. We are now debt converting our $900,000 non-deductible loan in 13.83 years. Tax refunds are lower because we are able to pay the mortgage off faster. And so the amount of home equity line of credit, the length of time that you hold it is smaller. So this goes down to just under $84,000. But look at this, 120 monthly payments reduced. This equates to $541,000 of payments that you do not have to pay. In order to pay $541,000 on your mortgage, you'd have to earn $902,000. Using that example before, if you had a job where you were earning $100,000 a year, that is 9 years that you are shaving off your working life simply by redirecting the cash flow. And this number gets me excited. You are able to pay off that $900,000 loan 10 years faster. So just incredible. And if we were to invest that 541,000 that you earn or you don't have to pay over that 10-year period at 8%, a net wealth improvement of $825,000. How awesome is that? When I'm talking about life-changing results, if I gave you an extra $800,000 in 30 years, I would live in family lore for forever in your family that you're the guy who gave us this $800,000. And so I show this to you because this is available to every Canadian who has a legal basement suite, who has at least 20% equity. And in most cases, as long as you have at least 15 years remaining of amortization, it is worth for you to run a rental cash damming scenario. So here is my call to action. Don't just sit on your butt and say, that's a cool strategy, that's great. I want you to do more research, learn more about rental cash damming. And if you're comfortable, please reach out to a rental cash damming professional. It does not have to be me, although I do run strategies for clients. But dig into this because it is absolutely life changing for people. My last thing, I do complimentary strategy runs for clients. So if you think that your numbers might generate something different, or you just like to see what it looks like, I always do complimentary strategy runs for clients just so that you can see the benefits that you can get from rental cash damming. If you enjoyed this strategy walkthrough, please watch the full video here that gives you a much clearer idea of how rental cash damming works and why you should be implementing it.